A lot of investors have begun to fret that in this new bull market, basically the only stocks that have been working are the mega caps. Nvidia obviously dragged everybody into this accelerated compute era. Isn't that unhealthy that the rest of the stock market continues to struggle at the beginning of a bull market? Surely this is an abnormal situation, right?
Hey everyone, welcome back to Chipstock Investor. We're going to be talking about GE Vernova today.
Yeah, specifically, this is a chip stock investor energy edition. If you've caught some of our energy edition episodes in the past, we like to talk about energy in light of semiconductors and especially accelerated computing and what that is starting to do to global electricity demand. Pretty incredible things happening here, right?
Yes, Nick, this is a very important part of the current bull market. Electrification of things like data centers has always been of prime importance. All the way back in 2022, when you interviewed Vice President of Enterprise Compute at Nvidia, Manavir Das, he mentioned specifically how much energy usage data centers require.
At the time, this was not a well-known problem. You can see here circled in red from GE Vernova's 2024 shareholder presentation earlier this year after they got spun off of GE. Currently 800 terawatt hours used for the current data center fleet around the world. That expected to go up as more accelerated compute infrastructure gets installed in those data centers and as more new data centers get built for AI training. Das told me back in 2022, it was something like a low to mid single digit percentage of total energy consumption was data centers. And he told me at the time it sounded shocking. That number probably headed to like 10% or more of global energy consumption going towards data centers, perhaps by the end of this decade. I think now pretty much everybody knows about that, or at least everybody that follows NVIDIA and accelerated compute and AI trend, I think now knows this. NVIDIA and the powers that be have known this was a problem for a long time. GE Vernova, one of those companies potentially in place to help solve that engineering problem.
I think I'd like to just point out for our non-electrician, non-engineering viewers out there, what exactly we're talking about when we say a terawatt hour. For reference, I had to look this up because I don't know anything about units of measurement when it comes to electricity. But just for an example, your hair dryer uses 1 to 1.8 kilowatt hours, or your refrigerator 0.1 to 0.25 kilowatt hours. An electric vehicle maybe uses 50 kilowatts of power to charge. So when we're talking about terawatt hours, entire countries' electricity consumption is measured in terawatts. And so when we see this massive number, over 800 terawatt hours used by data centers, you can see the breadth of this electricity usage. GE Vernova says that the electricity used for data centers will be as large as at least Sweden or potentially Germany. This is a bit of a confusing slide based on some of those statistics. The point is that the data center usage of energy is massive in the global economy, and it's only going to grow.
Now, there's a lot of implications for this depending on who you are and what it is you're working on. If you're looking at ways to reduce carbon emissions, a very different point of view if you're just trying to figure out how to make money from investments. If you're NVIDIA, you also have a very different point of view from this. Again, this is a problem NVIDIA has known about for quite some time. And this is an interesting quote that we've pulled before that Jensen Huang made during the analyst Q&A session of the GTC conference in March 2024. When asked again about the rising needs of power consumption from these new accelerated computing chips, like the new Blackwell platform, 100 kilowatts of power consumed by one of these new data center compute systems. Wang pointed out that ultimately energy is just a commodity. You guys, the analysts, know that, right? The ultimate takeaway here, power generation and delivery doesn't require new invention. It requires supply chain planning. It requires engineering. all of the technology needed to generate and then deliver this extra power is already in existence. So Nvidia argues this is just simply something that needs to be planned for, which I'll say it maybe leads us to one other notable thing I feel like needs pointed out. A lot of investors have begun to fret that in this new bull market, basically the only stocks that have been working are the mega caps. Nvidia obviously dragged everybody into this accelerated compute era. The cloud giants, their stocks have been doing very well. Microsoft, Google, Amazon, so on and so forth. Isn't that unhealthy that the rest of the stock market continues to struggle at the beginning of a bull market? Surely this is an abnormal situation, right? Actually, no, it's not. This is actually how new bull markets are formed. In a bear market, capital gets sucked out of the investing world. Companies sit on that cash and wait around and look for the next investment opportunity. That has been dialed in as accelerated computing, AI, whatever you want to call it. There's a rush of money headed towards that very narrow part of the economy. And as that new growth trend picks up steam, no pun intended for what we're about to talk about here momentarily, other parts of the economy join in on the trend. That's what leads us now to this power generation and delivery trend, which GE Vernova perhaps could be in prime position to benefit from.
Just a few months ago, GE Vernova completed its spinoff from the parent company, GE. Tell us a little bit more about how that worked out, Nick.
Yeah, this has been a few years in the making. So GE, the former conglomerate, is now known as GE Aerospace. That stock is in blue. A little over a year ago, at the beginning of 2023, GE Healthcare was spun off as a separate entity. That's the bottom orange line. And then most recently, to complete the three-way split of GE, is GE Vernova, or GEV. That's the newest stock on this chart. It just completed its spinoff in April. GE's plan to split into three businesses that are more focused on specific parts of the industrial sector of the economy is now complete. So let's talk about GE Vernova, the company that could be a participant in this power generation and delivery trend that is forming around the accelerated compute and AI bull market. Here's the revenue breakdown of the three companies. GE Vernova actually already a pretty sizable business, Kasey, at almost $34 billion in revenue in the last trailing 12-month period in Q1 2024. Power generation and delivery is not a new industry. This is over a century old. This company has its roots in Thomas Edison's inventions at the turn of the century that helped commercialize electricity. And so, as you can expect, for such a large sector of the economy and such a large business, there are lots of competitors.
Yes, there are some names that you may be familiar with in the energy sector: Hitachi, Westinghouse, ABB, Mitsubishi Electric, but also competitors like Tesla in energy grid are some of the newer competitors for a company like GE Vernova. How did Rolls-Royce end up on this competitors list? I'm totally curious.
Yeah, not the auto manufacturer part of Rolls-Royce, but we're going to be talking about things like gas turbines and gas engines, gas-powered engines. Rolls-Royce, a big player in that market. And then Kasey, to your point about Tesla as well as Oracle, at the very end, we're going to talk about the energy grid and how software, remember the old Mark Andreessen quote that software is eating the world? That trend could very much continue in the 2020s. So we'll circle back to Tesla and Oracle at the very end as it pertains to the energy grid. But first, let's talk about a high-level overview of GE Vernova now that it is free of its old GE parent organization.
GE Vernova is focusing on creating a lean operating model that focuses on safety, quality, delivery, and cost. They're doing this in order to ultimately boost profits. You can see that they're doing these Kaizen events for brainstorming sessions, decreasing the injury and illness rate within their company. And then they're also increasing electrification and decarbonization across various means of energy. We'll talk about that a little bit more about what types of energy they provide. Many times when Nick and I are making some big decisions, we make a pros cons list. So we decided to do that with our assessment of GE Vernova. Tell us a little bit more about our pros and cons for this company.
Well, let's start with the pros. So the obvious one that you just mentioned, GE Vernova participating in current energy growth trends. That's predominantly natural gas and closely related to that, hydrogen. That technology, it seems, works very similar to each other. Small modular nuclear power reactors, grid upgrades, you name it. It seems that GE Vernova has some sort of business line that participates in some of these new energy generation and delivery trends. Another pro, now that they're free of GE, which suffered from excessive corporate bloat over the last couple of decades, perhaps GE Vernova can be that more focused, more lean organization that they say they would like to be. And as a result, increase their profit margins along the way. And this is a bit of a surprise when we started digging into GE Vernova as a big, old industrialist business, expected there to be lots of debt. Actually, just the opposite was true. 3.26 billion in cash and short-term investments, 3.65 billion in equity investments, zero debt. Although they do have a couple billion in pension benefits, that's going to be essentially a recurring debt that they need to manage. But as far as the basic balance sheet goes, this company actually looks something of a big, giant industrial energy startup of sorts. We'll see if management can actually execute on that strength. What about the cons?
Current growth trends don't necessarily equal excess profit growth. When you look back at this comment that Jensen Huang made at GTC, energy is still a commodity. It doesn't necessarily equal exponential growth. And then less GE bloat doesn't mean no bloat for this company. It's a large industrialist. There are many parts of the business lines that still need fixing. And then the ultimate goal for their profit margins is it's just okay, right? It's nothing earth shattering. And then there's a great balance sheet, but how does that cash get mobilized? Are they going to start doing some acquisitions? What are they going to do with that cash?
Yeah, you'll also notice there's no dividend. As of yet, there's no share buybacks. So perhaps that becomes part of the story here as well. Ultimately, though, not a super exciting business. So let's take a look at the company's backlog. This is equipment and service revenue that they expect to deliver to their customers in the coming years. So there's a sizable backlog here that lays the foundation for some gradual growth over time, most of it services-based revenue. And this is currently in the equipment backlog, equally split across GE Vernova's three segments: power, wind, and electrification. But then services, that's what should drive more growth in the future. You can see the big power generation backlog. Let's start with the power segment. In the first quarter of 2024, 4 billion in revenue, up from 3.8 billion the year prior. EBITDA margins, profit margins, earnings before interest, tax, depreciation, and amortization. Nice, healthy year-over-year increase, nearly double the margin it was last year. Good stuff happening here. What exactly is in this power generation segment?
The largest part of this segment of the business is their natural gas energy. And closely related to that is the hydrogen power. They also have, as Nick mentioned, nuclear power and steam power, all fitting into this segment of the business. They're working through some of these business lines, such as switching old coal-powered plants to gas. Hydrogen is a small but growing part of this business. And then all the way on the right, small modular nuclear reactor, small part of the business, but still in growth phase.
Yeah, let's spend just a moment on this because GEV points out that this is actually one exciting area of growth in the business. and perhaps key to them reaching their modest growth expectations over the next 5 years. We recently listened to the audiobook Midnight in Chernobyl, basically in response, I think, I would say, to this growing interest in nuclear power. Isn't it interesting that it's something like artificial intelligence, accelerated compute, that would bring the world, parts of the world anyways, back around to thinking about nuclear power as a sustainable source of energy generation, some nearly 40 years after that disaster in Ukraine, in the former Soviet Union. Even in North America, which has been very cold to the idea of nuclear power for quite some time, there are new deals being signed here. And it looks like GE's small modular reactor, the ARC system, is picking up some momentum. You can check out the website for GEV's nuclear segment, including the nuclear fuel business. They've been announcing some deals regarding various utility authorities that have been signing on to purchase and install some of these small modular reactors. And then GEV was also awarded a nuclear fuel business to manufacture higher enrichment fuels early this year. So it appears that there is a bit of growth going on from this particular segment of the business. There's highly polarized opinions on nuclear power. So we're going to leave that alone and let you make up your own mind on whether this is a good thing or not. But this is one of the key tenets to GEV's growth strategy.
Let's talk about that next segment, wind power.
Another segment where there are some very polarized opinions.
You can see that revenue actually decreased a little bit for this segment of GE's business in the most recent quarter from 1.8 to 1.6 billion this year. This is probably the messiest of the three segments.
Yeah, GEV splits this segment down further into two subsegments: onshore wind generation and offshore wind generation. This is just like it sounds. Onshore is the bigger primary segment. These are wind turbines installed and operated on land. Offshore are wind turbines installed and operated out at sea. Perhaps you've seen pictures of those big wind turbines sitting out in the ocean somewhere, collecting all of that wind that comes off of the ocean. Offshore, in particular, has been challenged by high costs and questionable economics. Onshore, actually, a lot of work has already been done to make onshore wind generation a healthy and economically viable business. It's that offshore segment that has been problematic. So GEV is still working on this. The good news, at least from an investment perspective, is this is not the primary segment at GEV. And it sounds like they're deprioritizing growth in this area and instead just trying to get positive profit margins from the remaining backlog in existence, especially for offshore, but also for the onshore part of the portfolio as well.
Okay, let's talk about that final segment, electrification. This is the electric grid management or power delivery. The revenue grew from 1.3 to 1.7 billion year over year this last quarter. The revenue growth for this segment makes it a little bit more exciting when we're looking at this as an investment. Tell us a little bit more about this part of GEV.
This very much plays into some of the things happening with the electric vehicle market, as well as some of the more distributed, non-centralized power generation industry like wind, as well as solar, and then all of the energy storage systems, the big giant battery packs that need to be installed to help manage the generation of things like wind and solar. Essentially, what's happening here is you can think of this as the old transmission and distribution business, the existing power grid, now needing to be extended to accommodate some of these new types of energy, power, and distribution. Again, more decentralized. And a key part of this is orchestration software. So orchestration software of the past that just helped manage the big giant transmission lines coming from a centralized power generator and then having that distributed to businesses and households was relatively simple compared to this new, highly fragmented, highly distributed power generation future that we're headed towards. You can see this illustrated in this slide that GEV provides. Kasey, you mentioned this as one of your primary theses for owning Nvidia stock and actually calling it another top pick for 2024. Nvidia AI is not just about novel little chatbots that we interact with on the internet, right? When we talk about AI, there are some really, really powerful applications that are currently getting developed behind the scenes. One of them is orchestration software that manages where electricity is going to an increasingly more complex number of end applications. And I should say, maybe not just end applications, but also collection sources, and then distributing it to an increasingly complex number of end uses. This is but one powerful use case for the new accelerated compute infrastructure that is currently getting installed.
This leads us to discuss this software portion of the business. GEV has this grid OS orchestration software that helps companies, countries, states all manage that energy usage within their designated location.
Yeah, this GEV Grid OS software looks like it is actually something of a leader in this kind of under-followed software type. Who are some of the customers that would use a product like Grid OS?
A lot of different companies could use this grid OS software. Utility companies, I know I read a little bit about some of the applications used in various states, helping prevent power outages with this software. Data centers, manufacturing facilities, you name it, anyone that is using this power on a large scale could be using this software.
Now, that brings us to an interesting point we said we would circle back to at the very end when we talked about distribution. So, investors that have studied some of the deeper inner workings of Tesla know that Tesla has a whole suite of cloud-based energy data software platform that helps Tesla collect power and distribute power to all of its charging stations that are popping up all over the globe. This is an interesting area where software is indeed eating the world, so to speak. Tesla has developed its own in-house energy software. And this makes me think that all of this talk about accelerated computing infrastructure, AI, and the rapid increase of energy consumption is going to create some new tailwind for energy data software providers like Tesla in the years ahead. If we go back to that competitors list that we showed at the beginning, there are other companies that play in this part of the market as well, like Rockwell Automation, and of course, Oracle. Much like Tesla, unbeknownst to many people, has this energy software platform. Oracle also provides some energy software and energy data software to utilities, big manufacturers, other technology companies, so on and so forth. Kasey, this does make me wonder if this is perhaps going to be the most exciting part of GEV. Maybe not so much the nuclear reactor business, but simply energy software management. That maybe creates a new tailwind for other businesses that are a more focused bet on software as these new consumption needs from data centers come online. This will be an interesting area to watch and pay attention to.
Let's shift our focus to some of the financials for GEV. And we'll talk about first their guidance for this year. Revenue they expect to be 34 to 35 billion. Free cash flow 0.7 to 1.1 billion. And then for adjusted EBITDA margin, high end mid-single digit margin.
Yeah, like you said earlier, Kasey, GEV, in spite of some of the new growth trends emerging for this business, now free and clear to forge its own path forward of the old GE parent company, this is ultimately still a pretty boring looking business. So there's no forecasted ramp up or aggressive acceleration in revenue expected from management through the next 5 years. They're expecting that mid-single digit growth in organic revenue, excluding any acquisitions they might make with the cash on their balance sheet, to hold through the next 5 years or so. Adjusted EBITDA margins are expected to get to around 10% by 2028, and then free cash flow conversion to sort of converge with the adjusted EBITDA rate. So looking for something like roughly 10% free cash flow margins by 2028. That would be a nice increase from where the company expects to be this year, 0.7 to 1.1 billion in free cash flow on upwards of 35 billion in revenue. Let's just call that a 3% free cash flow margin. It's a pretty messy business. These margins need to be much, much higher.
Messy business with a messy slide deck.
Yeah, there's a lot going on. Like I said earlier, the old GE bloat is not completely gone with GE Vernova. Let's do a reverse discount cash flow to see what needs to happen to justify the current price, because since going public, it is up a pretty healthy 30-40% since the spinoff. At the beginning of this presentation, we showed you a couple of our charts that we made using finchat.io. We used the modeling tool on finchat.io to come up with this reverse DCF. Kasey, walk us through some of the basic assumptions we input to get us to fair value of $176.
Revenue growth of around 4.5% a year through 2028. Net income margins expanding to around 8% by 2028, which gets that free cash flow conversion goal of 10%. Terminal growth rate of 4.5% thereafter. And then we use a discount rate of 10%. That's what gets us to that fair value of the current share price at around $176. So do we think that's a proper expectation for GEV?
It sounds like this stock could maybe have some more upside. Yeah, they did say to expect through 2028 something in the order of mid-single digits revenue growth. 4.5% is definitely mid-single digits. Given some of the new growth trends that they have at their disposal, the nuclear reactor business, which is going from close to zero to maybe meaningful part of the business, fixing the wind portion of the business should definitely help the profit margins a lot. And then the software part of the power distribution business, maybe they can grow revenue more than 4.5%. And maybe they can get to those profit margin goals much quicker than 2028. I would say the stock actually looks like a fair value in our estimation. The question for us, are we personally buying? I think the answer to that is, for us personally, a no.
GEV doesn't necessarily add anything to our current portfolio. We already have Air Products, ticker symbol APD. That company is a leader in liquefied natural gas equipment and delivery systems. We also have Berkshire Hathaway, which of course has a large portion of their business focused on energy distribution. That being said, GEV doesn't add much to our portfolio currently, but if you're looking for a energy stock to add to your portfolio, it could be an interesting add.
And specifically, if you're looking for an energy picks and shovels play, some interesting stuff going on, again, behind the scenes, underneath the surface, that might be complementary if you own energy stocks, companies that like actually sell energy, maybe a utility or maybe a big integrated oil and gas major. GEV might be complementary to that. Take a look. Let us know what you think in the comments below. But I'd say ultimately, this is very much becoming an important part of the accelerated computing and AI story.
That's all from us here at Chipstock Investor. Make sure you hit the subscribe button if you have not already, and check out our Semiconductor Insider membership, link in the description. That gets you access to our Discord channel with a great community of investors where you can share your ideas and get educated.
It also gets you access to show notes like these ones on GE Vernova, as well as the show notes that we'll have accompanying our video later this week on BE Semiconductor. If you don't know what BE Semi is, we'll get you up to speed.
Check out this next video we have on our updates on the AI supercycle and chip manufacturing and packaging equipment right here.